Welcome, welcome, welcome. Thank you so much for being here. Quick AV check as well. I would love to get a couple of yeses if everything's displaying and coming across nicely. Tonight's webinar is going to be the Floor Trader's Secret Volume Breakout System. For those of you who don't know me, my name is Joe Roca, Managing Director of Commodities and Equities here at the wonderful and lovely Simpler Trading. Let's jump right into it, okay? Tonight we're going to be discussing breakouts. We're going to be discussing volume. We're going to be giving you the blueprint on how to ride some of these big waves. Right now you see an example of a breakout trade in the NASDAQ. This is the NQ, and these are futures. Going to be giving you some great examples and some teaching about how to do this on your own, how to identify these trades and these signals in advance. You can see that this profit is $4,900, and that was with a 3 lot. That was with a 3 lot. The risk 1,500, a phenomenal risk reward of 1 to 3. So when we see these markets rallying and we see them absolutely taking off, let's get involved, right? Let's be a part of that rally, and let's not just sit on the sidelines. And this evening, we're going to go over how we get into these trades. What are the best conditions and how we can put up these pretty big results. Right here again, this is a 3 lot trade in the NASDAQ. Took about 4.5 hours, and we'll be talking about our risk reward in a little bit, and I'm going to be giving you the blueprint of how to do this. The charting system you see on the screen now is Thinkorswim, and we can also provide you some charting books and applications for other charting systems as well. So without further ado, what you're going to discover tonight, okay? My main purpose is identifying and generating high risk reward trades. We want them to be 1 to 2. So we're going to risk $1 to make $2. We'll risk 100 to make 200, so on and so forth. And most importantly, we're going to be discussing and going through the process in where I identify these big breakout signals, and most importantly, in these big trending markets. How I target the best and most profitable signals with the highest probability in the right market and the right time. We're going to be avoiding the chop, right? We're going to be trying to stay out of those markets where it's up and down, and we're going to identify a technologically sound procedure for a clearly defined objective. Okay, again, a clearly defined objective. And that's what we're going to get into this evening. And there's so many futures out there, right? So many futures contracts you can trade. You can trade crude. You can trade the NASDAQ. You can trade soybeans. You can trade coconut futures. It's all available. But not only are we going to filter out the noise in markets, we're going to filter out the noise of the different commodities, the different equities, and explain the manner in which we can identify these high risk reward, 1 to 2 or higher. And we've got lots of examples. So let's get into it a little further. But first, let me introduce myself. I went to the University of Illinois at good old Urbana-Champaign. I got a degree in engineering with a focus as well in business, okay? Professional experience, so I moved straight to Manhattan right out of college and was thrown into the trading floor without any preparation and without any experience, right? And I graduate college and boom, I'm on the trading floor. And it was exciting. It was really, really exciting. And I was down there making markets, started out as a clerk, and really caught the tail end of that volume. As you know, now the trading floor is somewhat of an antiquated notion, right? Everything's done electronically, everything's done on the screen. But 15 years ago, that was not the case. So I accumulated that experience from the trading floor, from the OTC markets, and have brought that to the electronic version, i.e., I brought that to you. Okay, I've been in a proprietary trading position where I was trading with a small hedge fund. Okay, proprietary trading, a small hedge fund. Now, not only have I done that, I've also been on the commercial and physical side of trading, meaning you're buying a VLCC of crude oil in America and then selling it in Asia, right? So lots of volume, lots of experience that I'm here to share with you today, and that I will be sharing with you in our class on Saturday. I also ran an education company for a while, very similar to Simpler, and have the opportunity, and I've had the fortunate opportunity to come over and merge with them and bring you wonderful folks some knowledge, some insight that is a little bit unique, right? Versus some other trading education companies that are out there. Okay, some hobbies of mine, soccer. I played soccer in college. I do a lot of yoga. I do some meditation. I get teased for the yoga and the meditation, of course. Some find it slightly silly, but that comes back to the psychology of trading, right? And how you need to have a life balance and not only attribute your risk reward in trading, but put that in your life as well. So 15 years of experience, right? Why listen to me? There's dozens, hundreds of people out there who have got their indicators and their fundamentals, and that's great. But I'm going to be taking that a step further, 2 steps further, 3 steps further, and giving you an insight into these commercial and proprietary trading sectors that I've been involved in. Okay, it's been just an absolute blast to be in this industry. And to be taking these types of trades and identifying these big risk rewards. Now I've traded commodities, indexes, equities, and I've executed those through futures, options, OTC derivatives. OTC derivatives might be a little foreign to some of you, but I'll discuss that a little later and explain what they are and what that volume was and how that translates into what exactly it is we see today. So the background that I have, right, gives me an edge. It really does give me an edge. And that's all due to volume. It's really due to volume. And I have a deep understanding of market flow. So when the market's moving, right, the only thing that's going to push it is volume. So understanding that and having an insight into the reasons why translate perfectly over to retail. Okay, I've been the chief architect of algorithmic and high frequency trading strategies. Everyone's heard about algos. Algos are taking over. The market's moving, the market's flying for no apparent reason. But I've been the architect of those algorithmic strategies, and thus can give you an insight into how they work, why they're firing off, and what we can do with them. Okay, so I can understand when computers are taking over and when we should step out of our typical trading strategies and let the market come to me. On the other side of the coin, we're going to say, all right, this strategy we're going to identify based off of volume, based off of a breakout, is not only valid, but it is exponentially better in theory because the algos are doing the same thing. And it's a really great way to capitalize on some of these really large, seemingly random moves, right? We take what could be random and have a strategy to identify them and to put them on. And futures is a phenomenal way to do this, right? So as I mentioned, we're discovering how to use these pattern recognitions to stay out of losing trades. Just the other day, we had a breakout trade in the ES, and we were pretty confident that it wasn't going to be a great one. So traded it with small size, small risk. However, at the same time, in a different market, in the NASDAQ, we saw the same setup, a similar technical outlook, and based off of those technicals, and based off of those indicators, and based off of volume, we said, okay, let's go in with more size on this trade, and let's have targets that are very far off the market. So it's hard to buy a new high or sell a new low, but when we get into the class and we get into the details, it will be exciting. It will definitely be exciting. So logical question, why am I sharing my secrets? Secrets in quotes, right? And I love coaching. I absolutely love coaching. It's a passion of mine. My dad over here on the right has been a part of my sports career since I was little, since I could crawl onto the soccer field, right? And so I love sharing my experience. It's very fulfilling to me. And one thing I want to be very clear on, right? And one thing that you should know is if you're struggling and you're missing some of these trades and it's market's taking off or the market's getting smashed, with the right knowledge, this change is possible. Again, change is possible. And the strategy we're going to be going over, and the strategy I'll be teaching in the class, is going to be very black and white. And we'll look at the markets from a different viewpoint than you're probably accustomed to, right? And this can really help add some potentially great risk-reward trades to your book. And I love doing this. It's great. If I could coach soccer all day, I probably would, but I can't be on the soccer field. And this position that I'm in and this career choice here with Simpler has just been a blessing. It's been phenomenal. And we've seen results from the novice traders to the experienced traders. And if you've been in this market for 10, 15 years and you're saying, oh man, things are tough. Things are tough. Everything has changed. And that's true, right? The market evolves. Thus, we have to evolve with the market. And tonight, I'm going to explain exactly how we can do that to potentially get some great results. So again, back to the NASDAQ, right? NASDAQ making all-time highs. Why on earth has it rallied so much? Why? We've got this very sad pandemic sweeping the globe, but then this market is making all-time highs, right? So logically, it's a little challenging, and I understand that. So technically, we're going to get into the depth and the detail of how to ride these big waves, how to reduce your Oh. I'm sorry, I think I might have lost you folks for a little while. Can everybody hear me? We're back. Okay. So here's the question. How much phenomenal and important information did you folks miss out on? Who knows? But let's come right back to it. So as I was saying, in this particular trade, right, if you're with a brokerage house that is a bit smaller, you can have phenomenal intraday margins. And so in order to trade a 3 lot, you need $1,000 a lot, so 3,000 bucks. So this type of risk reward is possible. It is absolutely possible, okay? And we'll show you what we can do to take advantage of these big moves. And not only will I show you in the class on Saturday, but I'll show you in live trading sessions after that. So you'll see it live and in real time. It's not going to be theoretical. It's not going to be pontification or explaining a methodology. It's going to be something actionable that you can use immediately. Now, real quick, what I want to mention is, okay, $1,500 of risk, maybe that's a lot for you. Maybe that's not enough for you. But you can always trade the micros. This is with a mini NQ. You can trade the micro and risk 150 to make 5,000. So all of these trades you're going to be seeing and all of these examples can be scaled up and can be scaled down. Okay? So, but what it comes back to is risk versus reward. And this is an intraday trade that we started at 8:30. We were out and we were flat by about 1 o'clock. And in terms of managing this trade and moving your stops and trailing it and saying, should I sell here? Should I sell here? Should I sell here? It's predefined. It's crystal clear. And when you see me doing this live and in real time, not only will we have clear exits and clear entries, we'll identify the timing. How many times have you gone long because you're feeling bullish and then the market comes back, hits your stop, and then boom, takes off? So we're going to be discussing timing as well. So this is what I'm doing for you, right? I'm sharing my strategies, my tactics that you can immediately use to only trade the big moves. And I'm going to help you be avoiding these little losses that can accrue over time and can drain and eventually really bother you, right? And really hit your capital. But we're going to be showing you the big moves. And it's going to be great. You're going to enjoy it. It's going to be fun. It's going to be eye-opening. This is a new way to look at the market that you might be unfamiliar with. And this is an exciting example of what we're going to do going forward. So what do I want from you? Okay. I want a commitment that you're going to use what you learn and you're going to take action to improve your trading. As I said, this is going to help improve, and you are going to be committed to making success or having success, and I'm going to walk you through those steps. What's different about my trades? Okay, trade signals are black and white. They're very clear, as I mentioned in the previous examples. It's exceptionally easy to follow. The system can work for all levels of traders. If you're brand new to futures, or if you've been doing this for a long time, we're going to be adding a very important, very significant, and very phenomenal tool. Okay? And when we identify these signals, these risk-reward trades are predetermined. So we know in advance if we're going up or if we're going down. Back to the NASDAQ. Right? The previous example I showed you was the NASDAQ making all-time highs, rallying all the way to 10,000, right? But who's to say it's going to stop there? And why is it going to stop there? So in this example, you can see we bought 3 NASDAQ futures just over 10,000. On the previous trade, we sold them just under 10,000, right? And there was noise in between. There was noise in between, but we're going to filter out that noise for you. We're going to filter out that noise for you and kind of say, all right, when the technicals line up and we're in a bullish market, boy, let's hop on board and let's, again, ride that wave and let's use that volume and let's push this into our favor, okay? So market profile, high volume area. These 2 charts make my life exponentially easier, and gives us solid levels of entries and exits of where we feel the market will gravitate to. We have a strong understanding of the volume rate and how it's trading and how we can capitalize on those moves. Okay, in this chart, this market profile chart, the profile you see here in the black, okay, that's the amount of times the market has traded in these particular areas. So the further this chart sticks out to the right, the more times the market has traded there. So we look to use this chart as support and resistance. And we want to buy above these levels and look to ride it up to the top and scale out on our way. And it helps us get into these big moves and stay in these big moves with confidence and with a lower level of stress, right? So the key to your success, and quite frankly, the key to my success thus far in my trading career lies right here with these charts. And in the class on Saturday, we're going to go over these charts in detail, and we're going to get into the nitty-gritty. We're going to go through a granular analysis of how you can use this and how you can take this volume, incorporate it into your current strategies, right, and continue to profit. Now, one thing I do like to mention, and this is kind of cool, is that this isn't a completely new strategy that you have to change your entire style of trading. You can add this tool and these strategies to what you're already doing. So if you're doing well, that's great. That is phenomenal. But maybe we can help you do a little better. Let's add this tool in your toolbox. Let's put it there because it is very, very powerful. So this is a standard VWAP chart, and this is the second of 3 chart signals that I love to use, okay? And it's based off of volume. It's based off of volume. And let's say, why does the market move? Why does the market move? Why does it rally? Why does it break? And it's pretty simple. If it rallies, it's because there's more buyers versus sellers, right? More buyers versus sellers. So we want a chart, we want a technical indicator to help us identify when there's more buyers versus sellers, when the market's going to move, and how far it's going to go. This pink line is the VWAP, volume weighted average. The white line is an EMA, exponential moving average. And we have a very clear and very specific objective that we have predefined when putting these trades on. At the bottom, we have the CCI, Commodity Channel Index, okay, helping us identify if the market is overbought or oversold. Now, each candlestick you see in these charts, and this is a crude oil chart, is comprised of 377 trades. It's also known as a tick chart. So the vernacular might be different on your charting system, but they do tell you the same information, okay? And taking a quick look at this chart not only tells you price, direction, and time, but it also helps incorporate volume. So if you're accustomed to using a 5-minute candlestick chart, and you can look at something and make a quick visual analysis and take that, you can do the same thing with this volume weighted average chart, and it ends up being very powerful. It's powerful on its own. It's definitely powerful on its own, but when we incorporate the market profile and the HVA, right, everything becomes clearer, everything becomes more concise, understandable, and we get these black and white signals, meaning we'll take them or we'll just step back and let the market do its thing with the expectation that maybe this thing is moving sideways and we don't want to put our risk out, right? We don't want to initiate risk that we don't feel comfortable with, okay? So what is the VWAP chart? Volume weighted average, push versus pull, exponential moving averages, fast versus slow, commodity channel, overbought versus oversold. And we're going to be talking about how to use these specific charts. Why the VWAP? Again, the target is to ensure that the trader executes the order and does so in line with the volume on the market, right? Volume on the market. So when I was trading OTC, over the counter, right? I was making markets in trades and markets and market conditions just like this. So if someone wanted to sell 500 lots, I would have to give them a quote. If someone wanted to buy 500 lots, I would have to give them a quote. So I had to have a very intricate and intimate understanding of volume, right? What's pushing the market and why. So if I were to make a market just right around current value and my bid was hit and the market sunk and thousands of lots got pushed, we would have been blown out and things would have been terrible, and it's a hard thing to come back from, right? And I will admit that's happened once, maybe twice, but I have that experience that I can share with you on how to identify these big volume moves. And that's something I did day after day after day after day for the first 10 years of my career, right? So what's a little bit different about me versus a lot of the other trading companies that you've seen out there is that I have this professional experience where my sole job was trading. It was trading with large amounts of volume, and we're going to identify how to catch these big moves in this class on Saturday. And we're going to again talk about staying out of these low probability trades. Now, this particular trade in the CL, we sold 3 lots. We had a profit of $3,800, but we were only risking $600. That's risking $1 to make $6. And these types of high probability, high risk reward trades can really, really give you some massive winners and really help pad your account. Now, what's nice about this, right, is if we're wrong a couple times and we risk $1 and we have 3 losses, if that 4th trade's a winner, we still come out ahead, right? Best case scenario, the 1st or 2nd trade is right. And we're just enjoying this break. We're sitting back. We're not getting stressed out about it, and we're just riding these moves, okay? So here in the VWAP chart, and this is a long signal, trending long signal. We bought the CL here at 12.55. We sold it all the way up here at 15.95. So if you look over here to the right on the market profile chart, you can see a very thick line indicating support here at 12.55. You can see a very thick line up at the top indicating resistance. And as I mentioned before, we're looking to buy above support and sell under resistance. The most simple and easy concept of trading, right? Using these volume levels as defense, okay? And if you look at this VWAP chart, volume weighted average, the EMAs do not cross until we hit this ultimate high level of our target. So if we were only using this chart, we would be long. If we were only using this chart, we would be long. But when we pair them together, the confidence in this long position really, really improves. And it's a great way to passively put on some intraday trades that can make you some good money and make you some good profits. There's always risk, right? There's always risk. The win ratio is not 100%. Okay, and that's something I actually like to get into here, is that we don't want a high win ratio of 100%, right? If we're being too cautious and we're worried about taking a loss here, taking a loss there, right, we'll miss a lot of these big moves. And I understand that completely, right? It is tough to take a loss here or a loss there. But with these high risk rewards, we come out ahead. So we want that win ratio to kind of be in the middle, right? 70%, meaning we're not over trading, but we're not under trading and missing out on these big moves. Now, here's a bearish trade in crude oil. The risk reward is obviously less than the previous one of 1 to 6. Here we're at 1 to 2. Okay, so what's nice about this system is, again, not only does it work for breakouts, but it also works on some of these sideways markets too. Because the market's not always going to be making new highs, and it's not always going to be rallying hard or breaking and getting smashed, right? That's not the constant market condition that we are involved in. Okay, so we'll identify trades that we can also use on a smaller or more intimate time frame, but still have the opportunity to make money when the market's just moving sideways. And it's a very similar process as the breakout trades that I mentioned earlier. So this is one of my favorite slides, and I understand it's a bit silly, but jack of all trades. Is it better to be a jack of all trades or a master of one? And the answer that we have up here is, why not both, right? So I trade multiple asset classes: equities, commodities, stocks, options, etc. But with the market conditions that we're in now and the experience that I've had for the last 15 years, seeing new highs, seeing massive breaks, seeing volume come in and just crush the market, what we're experiencing right now in the economic layout is lots of big moves, right? Lots of big moves. So again, the jack of all trades. Crude oil is my baby. That's really got my start. That's my jam, crude oil. But we've identified other markets, maybe the ES, maybe the NQ, that have a better probability of profitability. So market selection is key, right? We're not going to be looking at dozens and dozens of stocks. Nothing wrong with that, but what I'm going to focus on, and what I'm going to show you how to focus on, is a few select markets, a few select futures, few select amount of futures, and inevitably you're going to do what you know, and I'm going to show you more knowledge, so when you're on your own, you can do it by yourself. But keep in mind, it's not all theoretical, right? We're going to show you in live market conditions what I'm doing, and we're going to show you before I do it, right? And you can follow along. Intimate product knowledge, volume, and understanding gives you a sound fundamental bias. And we lean on this bias when we take our technical signals, right? Generally, when you come into the market, you've got your bullish, your bearish side of things, right? And you have a feeling based off of what President Trump said, or what came out in the Fed minutes, and what the unemployment rate was. And if the market's bullish and we have bullish technical signals, the probability really does increase. So the HVA, the market profile, an advanced charting study that displays trading activity over a specified time period at specified time levels, specified price levels. And it's this histogram you see over here on the right. And I walked through it earlier, but I want to go over it again because again, and again, and again, and again, volume is key. And I'm going to show you how to use that volume, okay? How to use it in your favor, right? And how you can get an advantage over other retail traders, right? With my experience in the commercial and proprietary sector, having been exposed to the trading floor briefly, having been in the over-the-counter market for a long time, it's been a lot of fun. It's been a lot of fun. And now here with you folks, I can pass that knowledge on to you. Absolutely. Here's an example of the S&P 500. Okay. We sold 3 ES up here at 31.18, and we covered here, here, and here. Right? Why did we do that? Look on the right side of the screen in this market profile chart I showed you earlier, and our exits were predetermined. So our final buy in the ES is just above this HVA level of support at 3070. Okay, and lo and behold, when the market got down to 3063, it came back and turned up. Okay, and we're looking at what is a reasonable assumption of how far this market can actually move. And in our class, we're going to get into more depth on how to do this. But this trade, a $5,230 winner, risking 1,600. It's a risk reward of 1 to 4. And quite frankly, with a 3 lot or $3,000 worth of margin, that's a great move, right? But keep in mind, you are still risking 1,600. And with these high risk reward ratios, the more often we are able to identify these trades, and if we have a good win rate, we're going to come out on top, right? And when we can identify these market conditions, that is our objective. If we're over trading, we can definitely come out on the bottom, right? But I'm going to help you identify these setups so you can do them on your own. Okay, bearish trade here in the S&P. We've got the fast EMA going under the slow EMA. We're selling 4 lots here, and we're coming to the bottom as this breaks, covering. And we've got the idea of how far this market's going to go, right? Here's an example. It was a winning trade. The market went further. Okay, bummer we didn't catch the whole thing, right? But we catch a large majority. And our objective is to catch the middle of the move, right? We're never going to buy the absolute bottom or sell the absolute top. We're going to try and trade in between those. Okay, so this is the kind of suite of trades that we're looking at. And one thing I want to point out over here on the right is that this is a YM chart or a Dow futures chart. Okay, and with these correlated markets, the ES and the YM are nicely correlated. Now, it's not 1 to 1. And when I say correlated, I mean market A breaks before market B, right? And so on this day, we were looking at stocks, and the stock market was absolutely on fire. But then, what happened next? There was a big move to the downside. So we're looking at the ES, and we wanted to sell the ES, and then we saw, whoa, look at this. The YM's breaking first. We have a short signal based on technicals in the YM. So what do? After this market starts to move, we sell the ES up here. 10 minutes later, right, looking for the YM to lead us to the downside. And again, that gives us an advantage when looking at multiple products, not hundreds, maybe 2 or 3, and moving and taking our stops and our targets down with the market, okay? I always have an entry method. I have a checkbox. I have an exit method, right? and we P&L these trades out. This trade was 3,450. Okay, and for those of you who are trading on Thinkorswim, okay, this is a Thinkorswim chart book. So we have chart books for Sierra and Thinkorswim, and a lot of them can be duplicated in other charting packages as well. And we're going to show you how to get in and how to get involved with these market profile charts. So if you're a TOS user, we got you covered. If you're using Infinity, we got you covered. If you're using Sierra, we got you covered. And we can give you all sorts of options, inexpensive options that you can get some of these charts from. But don't worry about that, right? That's not what we've got you covered, okay? Again, new daily highs. How are we going to take this? Intraday move on the CL, the crude oil, right? As I mentioned earlier, the market doesn't always make new highs or always make new lows. So how can we use this system intraday on sideways markets, right? So this was on the DOE or the EIA, Department of Energy, when the crude oil supply and demand numbers came out, right? So if we see this big move in crude oil of, you know, about 100 cents or $1 on a one lot, that's a $1,000 move, right? And if we're trading it from a fundamental standpoint and it's verified by the technicals, we're going to get short with that market and we're going to look to ride that to the bottom. And it's fun. It is really, really fun. So bearish trades, bullish trades. Here's an example of a profit, 1,900. Okay. Again, risk 700. Risking $1 to make $2. Love it, love it, love it. Bearish trade in the NASDAQ, right? When this made new highs, people were kind of shocked. And you can see how it kind of was grinding up, right? But when it broke, boy, did it break, and boy, did it break hard, did it break far, and did it break fast? And it absolutely did, right? The bigger they are, the harder they fall. So you can see over here on the right, this is where the day began, right? At this particular level of 10,050. So we sold just above the low of the day, and we're looking to scale out based off of the levels we see over here on the right. And it worked out very nicely. We're looking at what's happening from a day-to-day basis. And in the middle, we have a market delta chart, which tells us if you're overbought or oversold. Now, this particular chart you see here is in Sierra. If you are a TOS user, Thinkorswim, we have a similar indicator that tells you the exact same thing, and we use it the exact same way. The display is a little different, but we get the same information at the exact same time and are able to apply it in the exact same way. And as I've mentioned, and I've said this a couple times now, if not more, we have to be prepared to take a loss here, take a loss there. And this is an example of a reversal where we were looking to sell the ES and take it back to the VWAP, but what happened? It popped and it went against us, right? And that happens, and we have to be accepting of that, right? Because we're not expecting to win 100% of the time. But with the system, we can be more relaxed. We can be less stressed. Okay, here's a simple CL trade. We have the EMA's cross, and it sinks back to this VWAP, volume weighted average. And by nature, if the average volume for the day is right here, that's where we think the market's going to go. And it comes right to that level, hits it, and we cover our short. Okay, and we also have an HVA level. So we just have plenty of examples of how you can use volume and use it with me, pair it with my experience, and I can show you what it is, what we're doing. So what did we discover tonight? Right, the reason a lot of traders fail is getting caught up in the trap, right? You want to avoid those really short, small inside days. But, and this is what's great, and this is why you're going to love this, and this is the reason we wanted to put this class out there for you folks, is that market conditions right now for breakouts are just phenomenal. They are. They have just phenomenal. And now is the time, really is my point. Now is the time to get in this class and to take some of these breakout trades and not experience that FOMO where you're just watching the market fly and you're saying to yourself, darn it, why did I not buy? And where should I have bought? And given the wide ranges, the unusually wide ranges, right now is the time when you want to be in this system. Showed you how I identified some of these big winners with the technicals, okay? And the missing piece to the puzzle of the indicators you're using is probably these volume-based indicators. And you can pair them up with the strategy you're already using, right, and give it a higher probability of profitability. We're avoiding that losing trade, right? What conditions should keep me out of this trade? The other day in the futures trading room, we had a breakout trade in the ES, the YM, and the NQ, okay? And I said to everyone, look, we're gonna take a breakout in the ES, we're only gonna use one lot. We're going to take a breakout in the NQ, and we're going to use 3 lots. Why? Because the NQ has a higher probability of rallying and rallying further. Okay? And we're giving you great examples and a really clear opportunity to have these black and white signals and how to properly manage your risk and how to appropriately move lots from this market to that market so you can catch the big moves and stay out of those losing trades. Avoid that losing trade, right? Let the market come to you. So why trade? And I'll tell you what, I come to work absolutely excited. It's great. This is the best job on the planet. Not only am I involved in the market and identifying fundamental patterns and technical patterns, right? We have the opportunity to make some good money with some good signals, right? And it's thrilling. I love it. I love coaching. I love teaching, and I am super excited to show you folks how to do this on your own on Saturday, and then after that, do it in front of you and do it live. So it's not just a process that we say, okay, here it is, go do it on your own, but also follow me live. Now you'll learn what you need to know on Saturday, right? But you'll see me execute it after that, and you can follow along, and it's very clear, and the signals are concise. So live a balanced life, right? Stay focused, stay calm. Stay focused, stay calm. And when we put these trades on, we understand and we identify the places where we can get in and not worry about it, right? If we get stopped out, we'll wait for the next one. If we take a big win, that's great, but we're not gonna go partying and go crazy and go to Vegas. We're gonna be just as comfortable with a big win as opposed to a small loss. And I'm gonna show you how to stay focused, stay calm, and really enjoy yourself. And this can seem like a steep challenge, right? Whether you've been doing this for a long time or whether you're new to it, right? And it seems like a steep journey and a hard hurdle to overcome. But with me, right, with my experience, having done this in the commercial and proprietary sector, having clerked on the floor, it gets a lot easier. And you get the benefit of that experience for you folks on a retail trading side. And again, it is a lot of fun, let me tell you. So the volume breakout system, which you've all been waiting for, these are the packages that we are offering. Okay, so the basic package is the class on Saturday. Okay, and in the class on Saturday, it's going to be about 4 or 5 hours, and we're going to be going through each individual chart, and we're going to be explaining how they pair up together. Okay, and that's what we're going to do on Saturday. I'm going to answer questions. I'll explain technicals. I'll talk about fundamentals. I'll talk about what we should risk and when we should risk it. We'll talk about, okay, if your trades have been unsuccessful, what we need to do to manage our risk and manage our account to get back up, right? That is the objective of the basic class, okay? But what's more important, well, I shouldn't say that, not what's more important, but what's a lot more fun, perhaps, if you will, is trading live, right? And seeing this happen in real time, okay? And that's the Pro package at $597. You get 2 days of live trading. I believe those are 3 or 4 hours a day. And markets willing, we will see some nice trades, some nice setups. And that gives you the opportunity to potentially not only cover your investment, right? Make a little more. And then after that, you can use the system going forward. Now, obviously, not every day is going to be a big day, but we will show you the market conditions where you can look to identify these big days. The Elite package, the absolute best value, it's phenomenal, absolutely phenomenal. 4 total days of trading, right? And if you look back at the trading signals that I did and some of the trades that we took, right? $1,000, $3,000, $5,000, right? It really can be quite exciting, and we have the opportunity to find those high probability trades, okay? And it's fun. It is fun. It is fun. It is fun. So I'm also going to be doing, in addition to this basic package, right, at $297, we've got a bonus for those of you who are new to futures, okay? If you're unfamiliar with futures, if you're an options trader, and you want some education on how to do this, we've got you covered. We've got a 2-hour class on Friday in addition to the Saturday class. And one thing I would like to say to those options traders out there is, if you can trade options, I can teach you how to trade futures. I can teach you how to trade futures. When I was on the trading floor and when I was trading OTC, the groups we were in were both options and futures, right? I would hedge the option positions. The options traders would hedge my futures positions. And if you also think about it, an option is simply a derivative of a future, right? So options are based off of futures. So if you're already trading options, you'll understand futures and you'll get on it, and you'll have a good idea of what's moving the options market. And you can potentially take signals and trades in both. You can hedge yourself. If you're trading options, this class is really, really for you. I've got to tell you, it's really for you, okay? And again, with the indicators, will they work on your platform? They'll work for Thinkorswim. We can send you that link for free. The chart book is free, okay? We'll also give you the Sierra chart book, okay, which is another program you can download and go for. Pro package, again, $597, and this is your opportunity to trade live, okay? No better way to deepen your mastery of the volume breakout system than to interact with Joe as he looks for high probability setups in real time. It's a good little piece of copy right there, a good little piece of copy. And live trading offers the fastest way to make these tools your tools, to make them your own, and to immediately sit down and apply them in real market conditions, right? I'm not going to give you an opportunity or a strategy where you say, okay, maybe you can use this next week, or maybe you can use this next month. No, you can use it tomorrow. And here's how to do it, and here's why to do it, okay? And the Elite package, again, at $797. Gotta say, I think this is an absolute phenomenal value. If you're going to trade and take signals for 2 days, why not do it for 4, right? And the other thing about this is the more days you spend with me live gives you more data to analyze, is this or is this not for me? Is this or is this not for me? And if it's for you, you have more proof, right? You have the skills, the understanding, and then the proof. 4 days, 3-4 hours a day, and that's when the fun really starts. And I'm not just saying sell here, buy here, right? With these black and white indicators that you will love. I'm explaining how I did it, why I did it. So it's not just trading, but it's a continuation of the educational process. It's a continuation of the educational process. And it's something that is really, really great. And everything is recorded, and you can watch it in real time. You can watch it on a recording and say, okay, you know, he started the day with no money and he ended with this, right? So you can have a very crystal clear set of data to analyze if it works for you or not, right? So new and exciting feature with PayPal credit. So if this is something you want to finance, we have the option here to do that with PayPal, 0% interest for 4 months, or excuse me, for 6 months. So if you're doing well and you're making a little money, you can finance it, right? That's always a great opportunity for you. So we're doing this PayPal credit, and if you're looking to finance it, this is an opportunity for you to do so. So the package that you want, basic, $297. That's the class on Saturday. That's where you'll get the basics, you'll learn what to do, and you'll have an understanding of what to do going forward. Okay, Pro at $597 with 2 days, and then the Elite with 7 days. The Elite with 7 days gives you the biggest advantage, and you'll learn the most, because if you think about it, you've got the 3-hour class, or the 4 or 5 hour class on Saturday. You've got the 2-hour class on Friday. But if you have 4 more days, that's another 12 to 16 hours of trading, right? And it's a couple $100 more. And I really feel this is where your investment comes to fruition, and you have just an excellent and a fun understanding. And we have a good time. We have a good time. I'm not just pontificating about do this, do that. No, we're going to enjoy ourselves. We are really going to enjoy ourselves. And it's a lot of fun. It's really a lot of fun. And when the market does break out and does take off in our direction, we can kind of sit back and enjoy ourselves and not be stressed and not be terribly worried. And that's really what's fun about trading. And having an understanding of volume, right? Having traded thousands and thousands and 10,000 lots at a time, and making markets over the counter with 20 brokers shouting over the box saying, I want to buy, I want to sell, and I want to do it here, here, and here, here. I'm able to show you where, when, and how. So with that, I'm going to go ahead and answer some questions here and take a look at what everyone has posted. One of our Futures Room members posted, "We do, Joe is fun." Thank you, Dan. I appreciate that. Very nice of you to say. So I'm going to go through some questions here. Feel free to post some right now, and I'll try and get to those as well. So I see someone who's trading with TOS but taking this course. Do I need to purchase any additional indicators? You do not. If you're trading with Thinkorswim, we'll send you the link. You can load the chart book, and you're ready to go right there. Okay. For Infinity, in addition to Sierra, if you're with Infinity, Doug, you can get Sierra and move through that. an example with gold futures and how I would analyze it. You know what? Let me pull that up actually, real quick. Sorry about this. So we're looking at this gold trade, and I talked about it last night, where since the 7th, okay, we traded inside this channel. Eventually we got stopped out, and now we're looking to trade inside this channel, okay? So we have long-term trades and short-term trades, and that is really the way we are able to confidently put on a position and let it ride and sit back, or be at the computer, be on the mouse, and be able to pull that trigger. Yes, you can get the charts in both Sierra and Toss. Okay, let's see. So you're going to be out of town 3 of the 4 lighting sessions. Yes, John, they will absolutely be recorded for you. Our class is from 12 to 4 Central. H went through that gold example for you. I know it was quick. But I'm trying to get to all those questions. If someone is in the room, in the webinar, who's in the trading room, if wants to give H there an example of one of the gold trades, that'd be great. 10 extra points to you. Let's see. Gold futures, we got that covered for you. Technical sessions on how to set up the charts. So we do have a technical session within the trading room. And when we go over the beginning course of the futures, we'll also look at the charts. And we also have a video that when you do sign up, you'll be able to look back and set these charts up as well. Now, in addition to that, and this is actually, I'm sure a lot of you had this question, while we're going through the class, I'll actually be using the charts and making adjustments and showing you how to use the charts in the middle of the class. So you don't only need the setup, I'll actually show you how to use them. And we do already have a tutorial out there for you. So Frisco, no, you don't need to purge anything. MT, which is better for a small beginner to start learning futures trading? I would actually take a look at Infinity. Would be, I think Infinity Futures is really the best way to go. A lot of positive feedback with that company from a retail side. You can also get Sierra with that as well. That's kind of my thought there. Trader JMF, will the target lines auto plot on the market profile? So within the class, I will show you how to set those up. So that will be covered in the class. And one of the advantages of that market profile is we don't necessarily want them to be auto-populated. We're going to identify how to populate them ourselves and how to use it. Mark, your wife got an engineering degree from UVI, 2 sons there as well. ILL, if you're in the webinar, reply with a good old INI. Steve, so software determining timing of getting in and out. Well, the software is the charting package that I'll be sharing with you. And that helps us identify the levels. In terms of timing, we're not terribly concerned on if it's a 5-minute trade or a 5-hour trade, right? We're just looking at price action, volume, and momentum. So if there's no volume and no momentum, then we're not going to be too worried about the time, right? We're just going to have our trade on. We're going to relax and see where it goes. Now, you do also, of course, have the opportunity where if we take a bullish position and the market doesn't move and it's just going sideways, we're going to say, okay, let's take this off for a scratch or a small win or a small loss, and then reset and come back tomorrow. So that's kind of your own your own thought process or whatever your preference is in terms of holding a trade, whatever you're most comfortable with. So this particular volume breakout system works best with futures. You can apply it to stocks, but in the class we're going to be focusing on futures. Okay. So Ernie, average time in a trade, I would say an hour, anywhere from like 30 minutes to 4 hours. So kind of it falls inside that zone. It depends on how much the market is moving. If it's a wide range day or a short range day, it generally falls in that little window of 30 minutes to 4 hours. So Sam, okay, we got back to that. So yeah, so Zimzam in the futures room, he says it's not always easy to follow your trades as the action is fast and furious. So going forward, I'm going to be sending out more alerts to those of you who are in the trading room and focusing on some trades that are not as infinite and, well, or so concise, right? So quick. So I'm going to be looking to identify some of these signals and send them out as alerts. But I want to be very clear that you want to have I want to be clear that I want you to be clear about the rationale and the reasoning for putting on that trade so you can determine if it's something you're confident in. Okay. And that's where the class comes in. And we'll be following that up with the alerts in the futures room. Okay, so Papa, yeah, we went through Sierra charts. We went through TOS. You can simply use TOS for sure. The training is recorded, as mentioned. Okay. So JK, the TOS shared link comes after you register for the class, and you can sign up there. The link to enroll looks like it was just posted above. You live in Canada and TOS is 15 minutes delayed because of account size. So what you can do, so if it's 15 minutes delayed, that means you're not trading live, you're trading sim. So with respect to charting, it's really not a problem at all whatsoever, Alex. It's really not, because the long-term market profile is just that, long-term. So the 15 minutes makes no difference. So if you're practicing on a simulated account, this class is perfect for you, and you can, join in those live sessions as well, and you'll already know if we're going to be up or down on that particular signal. Okay. Okay, here's a good question. It is, hi there, thanks for the training. I struggle with indices and how they correlate with technical analysis, right? Because they're derived from underlying stocks. So, and this question kind of goes on to say, can you go with technical analysis if an index in the underlying stocks are doing their own thing and have their own technical analysis, right? So insights as to what the risk with futures are versus the risk in stocks. So Anthony, that's a great question. That is a really great question. I posted a trade of the week with Simpler, and the thought is that the NQ is going to rally all the way up to 11,000, right? So what we do is we look at some of those FANG stocks as potentially correlated lead or lag indicators. Okay, potentially correlated lead or lag indicators. So we're doing our analysis on the NQ and kind of keeping an eye in the background of some of those technical stocks. Now, again, the NQ is composed of many, 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 many stocks. So it's really its own animal, right? But we have some of these other big boys in the background that it's comprised of, and we're able to use that as a lead lag indicator, just like we used in the example I showed you earlier about the ES and the YM, meaning the Dow is leaning the S&P. So hopefully that answers your question there. Okay, so if you purchase the class, yes, the workspace and the indicators are all set up and ready to go. So you're good there. Steve asked, can this be done with a small account? And that is yes, yes, yes. So in the examples I was showing you, the marginal requirements were $3,000, so $1,000 per lot. And what you can do is actually trade a micro contract, which is 1/10 the size. So if you have 3 micro NQ, right, you would need $300 in your account. So you can start with a small size, get an understanding of what works best for you, what trades are best for you, what signals are best for you, what you're comfortable risking for a reward. And then from there, you can scale up. So it's absolutely it's absolutely inclusion. It includes small accounts, big accounts. And if you're using a small account, this class is even a great place to start. It's a great place to learn. It's a great place to, kind of test your results, okay, or test the system to then analyze your results. Okay. All right. Going through some more questions. Okay, so I keep saying high risk reward, which is fine, 1 to 3 or 1 to 4. It seems when you're calling these signals out, there's high risk reward but low probability. So Lorna had a great question. She had a great question. So if I call a signal out that has a big risk reward, so risking $1 to make $4, but it's a quote low probability, right? And if I say it's a 50-50 shot, right? So the thought there, Lorna, is that if we're only right half the time, right, and it's a 1 to 4 risk reward, that means we would have a $1 loss twice and a $4 gain twice, right? So we lose $2 and make $8. So the process in the system is a $6 winner. So that's how we analyze these risk rewards. And you'll notice, like in today, I'm not sure if you were there today, Lorna, but all of the trades I went in with 3 lots versus 1 or 2 lots were winners. And that's because I said this is a high probability trade. I'm comfortable initiating a little bit more risk. And they were also quick trades, right? And what's great about that is it's a quick trade because it was high volume and that high volume came in. Okay. All right. So I think I've gotten through a lot of questions here. Joel asked, do you work with many, many charts and indicators? Or do you have a more simplified approach? So we have a simplified approach where we're looking at 2 or 3 charts and 2 or 3 charts only, Joel. 2 or 3 charts only. So we're not, and those particular charts are comprised of multiple indicators, right? It's compiled of multiple indicators. But you're just looking at one chart and it's telling you one thing. And one chart is saying buy, and if the other chart says buy, you're good to go. So it's these 2 main charts that we're looking at. And I think that helps out. Now, Joel, if you that's from novice to experienced. Once you get more accustomed to using these charts, right? And if you remember that example I showed you where the YM, the Dow broke before the ES, the S&P, then you can add that chart to your thought process, right? And you can do it incrementally, right? You don't have to, you start with 2 charts, and you can kind of slowly look at those correlated products and begin to add, right? But you're not going to have 5,000 charts and looking all over the place. You're going to be looking at 2 or 3. It's going to be simple. It's going to be black and white. And I'm going to show you. And in the Elite package with the trading days, it'll become even more clear. And that's what I think what people will enjoy the most. You got it. Karen, if someone wants to get to Karen, yeah, we've got the class. It should be in the Simpler store. Trader JMF, in the class, do I share all of the trade tick chart settings you recommended, including things like coffee, wheat, corn? Yeah. So you can duplicate this chart book, and I can give you a very simple call it ratio to use from. So like if there's 1 million lots that are traded in the ES and there's 500 or 5,000 lots traded in CL, that produces a tick chart of 377 versus 1594. So it's all a ratio. So the answer is yes, without getting into too much detail there. So small accounts, I believe futures do not have PDT rules that plague people with small accounts trading stocks options that do not have a cash accounts or large balance. Okay. What brokers are you referring to for the micros? So Walt. So if you use TradeStation, Ninja, or Infinity Futures, they all offer micros, right? So again, a micro requires about $100 of margin versus a mini, which requires about 1,000. So I'd recommend contacting Infinity Futures. Great customer service, great charts, and then you can get the CR and load that right up with it there, Walt. So Steve, minimum account size, I may have already touched on this, but a lot of them are about 3K. Some of them you can do with 2K. If you're just doing the micros, you can get away with a pretty lower initial balance, right? And just test the system out in micros. Okay. All right. So I think I have gotten to most of the questions. So just want to thank you folks for attending tonight. Hopefully you learned a little bit and you're interested in coming on board with me and with Simpler here and expanding your trading, expanding your knowledge, and really getting after these big moves. And so you're not sitting on the sideline and you're not saying, oh boy, the NQ made another high. I missed it. The NQ made another high. I missed it. No. We're going to be looking to catch those. We're going to be looking to ride those. It's going to be fun. It's going to be interesting. I would imagine this is a new approach to most of you. And, having done this with, with commercial firms, proprietary firms, I think the experience that I'll show you is going to be really cool. And I think it'll be a lot of fun, and it can be very profitable too. So everybody, thank you so much for coming. And if you have any questions, please don't hesitate to shoot an email to support@Simpler Trading. You've got the web link to buy the course right up there on the screen. And we also encourage you to give us a call if you have any questions, and we'll get you set up. We'll get you ready to go. And I will see you folks on Saturday. So with that, everyone have a wonderful evening. Thank you so much. And I will see you folks on Saturday. Cheers.